I'm going to bring up Ben Coll, who I now know is going to be an unpaid intern for the rest of his tenure at MCT. So let's put your hands together for Ben Coll, our Director of Administrative Trade Operations.
How you doing, everybody? Clearly, Chris had given Curtis a preview of his speech because I checked my direct deposit and it just had a smiley face on there. So thanks, Curtis. Appreciate that. Going back to a comment that Amy made yesterday from one of her former bosses that in this particular market, a pet monkey can make money. I think we'd all be honest with ourselves to say the last few years, due to easy monetary and easy fiscal policies, pet monkeys could make a good living in this market. Obviously, that's going to be changing. You've got some Fed tightening and other policies that are going to be changing. So we wanted to put a panel together of lenders for lenders, as Chris said earlier, and we're going to talk through a couple topics. We're going to talk through volume and profitability. We're going to talk through products and affordability, and then we're going to get into some really exciting internal procedural stuff. So, but with that, Chris, if you want to bring the panel up.
It's a shorter introduction than I thought. I thought I had a second there. I'm trying to put in a throw loss. This guy's always keeping me on my toes. So the one thing we really do hope and expect from all of you great participants out there is we've assembled a wonderful panel of secondary experts from our client base, but we really want you guys to get engaged and ask questions throughout. So I'll be running around sweating profusely on you to bring you a microphone for questions. But let's bring up our panelists. I want to welcome to the stage Cece Carden from Aspire Financial. Cece is the VP of Secondary Marketing. Come on down, Cece. Florence Celeste from Rockland Trust, VP Secondary and Strategy. Thank you. Kurt Herdsman, Mountain America Federal Credit Union, AVP of Secondary. There he is. Get on down here. And Cameron Mott, he's probably still at the Bloody Mary bar, but just in case, Cameron Mott, Armed Forces Bank, SVP and Director of Mortgage Banking. Let's get a good round of applause for all these folks here. So again, this is a panel of originators that worked tirelessly on coming up with a great set of questions that we think are going to be representative of what everybody's facing right now. But again, we want you to feel free to interact. I was told I spiked the volume too much here. So I'm going to turn it over to Ben, who speaks much more quietly than I do, to kick us off. Who's fired up? Because I'm fired up. Are you fired up? There we go.
All right, Cece, first question for you. What's your strategy to help mitigate the drop in volume while maintaining profitability?
Well, for us, sorry, I have a low voice as it is. For us, it's really utilizing the AOT platform with MCT. It allows us to bring back the profitability in those lower coupon concentration, as well as mitigating that broker-dealer tick risk as well. Then adding in non-QM as a higher profitability in general. It's going to help that curve as far as market compression that we're seeing today until the market stabilizes a little bit.
That's awesome, Cece. And so I'm going to actually ask a favor from Mr. Ben Garcia back there. Would you mind grabbing some water for Kurt here? We don't want him to dry out. And Ben, do you need one there?
I'm good, thank you.
Just welcome Ben to the MCT team. It's a very expensive guy to get water, let me tell you that. But moving on, hey, so question for you, Florence. What types of non-portfolio products are important to have in your suite of product offerings to have a successful business in 2022?
Well, before I start, I just wanted to say I think Ben called me to ask me on this panel because I'm the biggest pain in the ass customer. And I think I get $100, right, for saying that.
Love it, I love it.
But
I just remembered I owe you a Bloody Mary. I did trick you with that, didn't I?
I know. I think in terms of non-portfolio products, I don't know. I think more is better. I think the renovation products that Amy talked about yesterday are important. I think products for first-time home buyers, FHA, Home Possible, Home Ready. First-time home buyers, I think they're going to struggle to come up with the down payment. the conforming limit increased, which is great, but I think a lot of the first-time home buyers are priced out of the market now. I think ARMs are going to come back in the near future. The Feds are going to raise the rates maybe 3 or 4 times this year, I think. So I think that's going to be important. People that that know that they're going to sell their house, within 7 years, they tend to be favoring the ARMs. And then there's funky products like interest-only, asset-based, things like that. I think, like I said, I think more is better. There's some investors that are pricing specific for purchases. Their rates are much better, so I think it's important to research those and just get as many products as you think that your market needs.
That's a great point. And one of the things that I've been having a lot of conversations this whole conference, I'm sure, Ben, you have too. MCT not only has visibility into hedge production, so we all know those kind of clean vanilla loans, but we also have on our outsourced lock desk, we have the ability to really see a client's entire pipeline. So we're looking at about 70 clients that are delivering into a lot of these different and we've got a couple customers up here actually, but they're locking on maybe a best efforts basis, an IO jumbo, or there's a lot of different products that we're seeing out there, and there's more and more coming in. So certainly if you're an MCT lock desk client, hit us up on that, but we can also provide that sort of on a more macro level to just get you an idea of those products that are being originated and who's purchasing them. But hey, I'd like to just weigh in for everybody. Any other products that you guys are thinking about here?
We're really looking at products for first responders and really trying to get them 100% product, those that are not eligible for VA. So, kind of a low fee with a low MI. But just anywhere, any place that we can help, right? We know that inventory sucks. We know that the pricing's gone up, so affordability is at risk. So what can we do? And we look at the portfolio to kind of help that. And we look at affinity groups too, to help the folks that we like to service. So all of our veterans, all of our first responders, and so forth.
The other thing, Kurt, did you have anything to add?
Yeah, one of the options that we've looked at is also first responders, but also teachers. With the pandemic and everything that's gone on, we've offered particular programs that will help teachers. We're also looking at minorities and some other options as well. So constantly looking to innovate. One of the products that we're looking at that's going to set us apart, I think, as well, is we've started to come up look at where the market's headed. With a 2.5% interest rate, people aren't going to want to refinance their first. But we realize there's a shortage of housing, so we're looking at, can we do a one-time close construction second, allowing them to keep their first mortgage in place and be able to move into a second lien to be able to help with the construction phase or renovation. And that also works for construction overruns, which we're seeing a lot in our market as well.
Actually, I was going to say, Chris, we're going to go a little off script, but this is a jump ball for all of you guys. But at your respective organizations, who does the product development, or to what Chris said, right? If you have an idea, bring it to me and I'll put the capital behind it. But is that are you individuals responsible for kind of reaching out to the loan officers and, hey, what are the needs? What are you guys hearing? Or do you guys have is it a kind of a jump ball within your organizations? Who's going to be responsible for finding or sourcing?
And to be clear, he was talking about Chris George, who was going to capitalize that, not Chris Anderson.
Anyone, go ahead. I'll take it.
Okay.
Within our organization, we're basically we have a committee that meets quarterly, and we'll review updates, we'll review program guidelines. We do survey our loan officers to see what is missing. We also will review our denied files and look to see why they were denied. From those denials, we'll look to see, are there options that we could have done differently? Are there program guideline changes that we can evaluate and implement? And that's kind of how we look at what programs we want to bring to market.
And one of the things that I've noted in a lot of the conversations that I've been having over the last couple of days is, it's awesome to have this committee to bring forth new production. But when you're considering that new production, and I was speaking down at the Southern Secondary a week or two ago, and I really hadn't thought about it, the training, because we're so capital markets focused, but if you aren't engaging your sales force, your originators, and training them on the eligibility and all of the pricing impacts and who the targeting is. So when you're evaluating partners to start bringing on these new products to, ask them about their training for your loan officers. Do they have a good resource library? Are they willing to come in and do some one-on-one training? I'm sure there's a lot of investors here in the office or in the room today, and they'll be networking all day. So I'd encourage everybody to talk to them about what new production is out there and how are they going to educate and train your staff to go out and sell that to borrowers. And I'm letting Ben talk so much. He's just overrunning me. So go for it. You've got the next question, I think, right?
Yeah, and I think Kurt had kind of answered, so I'll jump down to 4 if you want. But Florence, can you comment on inventory in your market? I know you're up in Massachusetts, but can you comment on inventory and as we enter the spring housing or the spring buying season? Do you guys have concerns within the organization or?
Well, inventory is probably down by at least 50% in a lot of the towns, especially Boston and the Cape Cod area. And it's caused concern. I think everybody here is probably in areas that inventory is going down and the prices are increasing. The problems that we're having is appraisals aren't coming in at the purchase price. So we had one instance where someone did an appraisal and it came in like $280,000 below the purchase price, and the borrower went to another bank and his appraisal came in at purchase price. So we're seeing those problems. Buyers are paying cash, especially in Boston, and buyers, which I feel bad, first-time home buyers, they're having to waive all contingencies. They're having to pay more. Sellers don't want people that can't put down at least 20%. Some loan officers have told me that the real estate agents are buying the properties before they're even listed. And then we have the loan officers. They're all competing for this one loan, so it's really driving prices and margins are being compressed. And I'm not sure how far those things can decrease for us to keep being profitable. But they were saying in Cape Cod that there's so many, like Nantucket, a lot of wealthy people buy on Nantucket. That's it. There's really no affordable housing on Nantucket. But in the Cape, I would say 2 years ago there was affordable housing, but now what's happening is the lack of inventory has driven the prices up, and all pretty wealthy people are coming to the area. And what's happening is they're only there a few months out of the year, so the local businesses are starting to suffer because there's no customers for them sort of in the winter and spring and fall. So yes, we're concerned. I'm personally, like I said, I think the only thing we can do is support the loan officers, talk to them, see what they need, see what products we don't have, see what products will work in our area. And I think, like Kurt said, we could collaborate as far as products. I might research it and find the product, and then we'll have a meeting and we'll talk to the production manager, the post-closing. We'll make sure that our LOS system can support the product, disclosing it. But I think that's the best that we can do. I mean, we could try to improve ops and say we can close your loan in 30 days. I'm very customer oriented, so if we get a new loan officer and they want to impress an agent, I'm like, I'll get your loan done in the fastest time possible so that you can get more business from that agent.
You raise a really, pardon me, you raise a really great point about these specialty products, and you mentioned, are they being supported in the LOS so you can disclose them? but also are they being supported in your pricing engine so you got access to your originators to be able to price them? And I know that's something folks do run into from time to time with this wide breadth of new products that are coming in. So as you're evaluating these, you definitely want to consider, is your PPE going to support them? And I see Eloise staring me down right there. If your PPE doesn't support them, I'm sure hers will, and that probably just got me in trouble with the Zillow guys. And if hers doesn't, the Zillow guys will. And if Lender Price is in here, if neither of them will, Lender Price will. So did I cover all my bases there? Is there anybody else?
No, you never mentioned OB.
Ah, okay, well, there you go. You know, the other thing that, you know, it was a really good point that you just raised about second homes being vacant so often. So where Phil Rosori and I live in a small town up north, there actually, the local jurisdiction is imposing an additional tax on folks. So that's something that your originators need to be aware of, that on second homes, there are all of these kind of just, you know, luxury taxes, as it were, to sort of offset the losses that the businesses aren't going to be seeing, you know, throughout the whole year. So definitely knowing. What about some of the other areas that you guys, what are you guys seeing? I can get you a 1.452 million double wide if you haven't heard me talk about this in my neighborhood. And it's a great deal. I'll hook you guys up. What are you guys seeing? Nothing. That's great. All right. Well, I went off script. That did not work there. Can anybody beat 1.452 for an 1,800 square foot double wide? Nailed it. Nailed it. All right. So moving on here, Kurt, did you want to expand at all about, you know, all of the portfolio products that you're able to offer in a loan officer retention sort of aspect?
Yeah, I'll go ahead and expand on that. So as a credit union, we face a couple of obstacles in retaining loan officers. One of them is that when you look at credit unions and the reputation, a lot of borrowers out there don't realize that we even do mortgages. And then you have another dimension of credit unions that will do them, but they're short-term mortgages or home equity loans. And then you have kind of where we are, where we originate the full spectrum of released, retained, non-QM, portfolio. And so trying to overcome that reputation is one of the things that can be difficult. One of the other things that we look at for our LOs is that to try and set them apart, and how do we do that? And so we really use our portfolio products as an opportunity to do so. One of the programs that we have is we do have a 100% no MI first-time homebuyer program. We exceed you know, some of the HFA programs as far as limits. We don't put an income cap on it, so that it is open to a wide population of people. And with the home prices being what they are, that's been something that's very attractive, that helps people. In our market, we're based out of Salt Lake City, Utah. A first-time homebuyer home now is running about $500,000. And so when you look at what the affordability of that is, that's a difficult proposition for somebody who's, you know, coming out of college or just getting married. So we're looking at different options. The manufactured housing industry, we talk a lot about that, and there's been a lot of push towards that. You know, when I talk to my LOs, what I'm hearing is that in our area, to get a manufactured home right now, it's 10 to 12 months out. And when you look at what interest rates are going to be 10 to 12 months from now, that creates concern and panic among some of the people. So we're looking at, you know, how can we take and do that? How can we build that? The other benefit, I guess, of the portfolio products that our LOs have is being a credit union, you know, we have a specific committee that reviews loans each week for exceptions. So if there's a near miss on a product, we can go ahead and say, okay, yeah, this makes sense. This is a good borrower, but for whatever reason, there's something that's just off the mark a little bit on that. And so we can go ahead and review that. We do quite a few of those. And that's a tool that we provide our LOs to say, hey, we can make exceptions. We can get these deals done for you. That strengthens that builder-realtor relationship, which is where we try and have them be focused. And so, like I said, I know on our credit union, we're very proactive. We're more progressive with our loan products than a lot of other institutions. But we have some that have been tested over time, and we're willing to go out there and say, hey, you know we will have a higher delinquency on some of these, but we want to help and want to fulfill the need in the community. And so that's the approach that we take when we look at new programs.
Great, absolutely great. Anybody else want to add anything to add there, or shall we move on here? I don't want to step on anybody's toes because Ben just won't get on that microphone.
I feel as though Cameron wants to answer a question.
To answer a question.
Regarding affordability, has the bank's CRA strategies, have they had to evolve over the last few years as housing prices have spiked over the pandemic?
So glad you asked, Ben. This is an amazing question. I appreciate it. So it's business as usual. What we do is we wait until October, and then we call Chris George and we ask him, hey, do you have any CRA that we can buy from you? And so, yeah, business as usual. No, really, 12/2, I started the Armed Forces Bank. So it's kind of a new deal. We have a sister bank, Academy Bank. So I don't really know much about all the strategy, but I can tell you that it is business as usual. We're always looking for more affordable products. We take a bank-wide approach. So it's not just mortgage, thankfully. Because I lend nationwide, and my average loan size last year was over 400,000. So that doesn't help me in the CRA markets, right? If there's any compliance officers in here, please shut your ears off, or leave. You shouldn't be here anyway. No, but anyway, so yeah, like first-time home buyer programs. We talked about kind of like Kurt. We have portfolio stuff for first-time home buyers. We're really focused on second mortgages. We get into the community as far as what can we do from a depository standpoint as well. Whether it's checking, savings accounts with no fees, all those things. But like I said, I've only been there since December, so that's really all that I know right now.
Well, and I know we have some really exciting CRA products coming through our different marketplaces that we're going to be releasing, so hopefully we can be helping you out right there. Talk to Justin Grant, twist his arm on it, all right?
I'll do it.
And I'm going to ask for a time check from, I don't know, ladies and gentlemen, has everybody met our CFO, Dave Bricker? I'd like him to just stand up here. This is the guy that tells me I can't have Starbucks. What would I do without Starbucks, guys? Give me official time date. 11:22. We are blowing through this here. We did not write enough questions, Ben Coll. So everybody start. Yes, please, Ann, stand up. You got a question for us? I'll come running. Well, I'll come walking slowly down these stairs. And then a slight jog to look like I'm running. You know, it's more of a walk. Kind of, but here we go. Let's jump in here.
Okay, I don't have a question. I'm gonna make some statements.
Make some statements. All right. I take no responsibility for these statements. They are the speaker alone.
Okay, from a warehouse perspective, this is what we're seeing in the marketplace today. Is it open? Is it on? Okay. From a warehouse perspective, and I'm sure I have some of my other fellow colleagues in here with the other warehouse banks, these are some of the things that we're seeing come through to us and wanting us to find on behalf of the mortgage banker. One of them is fix and flip, construction to perm, rehabs, bridge loans. The thing about it is with the rehabs and everything right now, with the market being like it is, you have a lot of companies out here that are purchasing homes, second homes, maybe empty. They're going out there buying these homes, they're renovating them, they're selling them in a second, they're either selling them off or they're going to keep them and they're going to rent them. And those are some of the kind of things that we're seeing that's coming out there. The other thing that has come up is that from a construction to perm standpoint, where I don't know what the other warehouse facilities do, but we have site-built 360, modulars 300, mobile homes, double wides 180. We do the first, you can do a one-time close or a two-time close, where these loans are either can be sold to Fannie Mae, could be sold to Wells Fargo, could be sold to any other of the, investors out in the marketplace. I got a call last week about they're hearing about from builders that it's going to take longer than 360 days to finish a home, because the reason is because the materials. There's a delay of materials, labor, COVID, things going on. So we're getting calls from clients, well, we want to fund this on our line, but if it's going to take longer than 360, how can we, expand this out? And those are some of the kind of things that we are talking to some of our clients about. As far as construction to perm is concerned, you have these really high producing loan officers that are out there looking sometimes for those programs for their builders, for their realtors that they, the realtor company that they're working for. And so we see a lot of that as well, because they're wanting to go to mortgage companies who are offering those type of programs. I'm glad to hear that the credit unions are still doing the 100%, loans out there for the first-time home buyers. I don't think that I hear a lot about that, and if you can tell from the southern from the southern draw. I'm from Alabama, of course, and, you know, we don't hear a lot about that in our area out there. You know, MSR financing. We're hearing a lot of that going on right now, which we do that as well, and I'm sure that some of our my other colleagues, other warehouse providers in the room, I'm sure that they offer that as well. Modifications, where you're buying loans out of pools and you're refinancing them and you're putting them back in, the Ginnie Mae pools and things of that sort. So, Chris, those are some of the things that we see from a warehouse perspective that is coming up, and I just thought I would make a statement on that, and hopefully it helps.
And it helps wonderfully. You're killing time for us. I loved everything you had to say. That was fabulous. How about a hand for our unofficial panelist here? Thank you, Ann. So I'd like to kick it back up to the panel here with a question to Cece. Cece, in relation to strategy, what would you consider most important? Product mix, client mix, price negotiation, or spending reduction? No pressure.
Yeah. I mean, well, for us, it's having that healthy balance in product availability as well as marketing and lead spending. Being a consumer direct lender, we have to be cognitive of our spending as lead costs are rising, holding that rate competitiveness on the front, as well as adding products to really supplement the loss and refinance applications. Also, you know, being a lender predominantly in Texas, we have that Texas refinance, that A6. So being that inflated appraised values right now, borrowers really have a lot of equity, you know, they haven't really had before, that have really helped us offset that reduction in just the straight refinance transactions. Our A6 production has been very, very healthy. So yeah, I would say product availability, spending, and marketing.
Love it. Thank you so much, Cece. And I've got another question, comment here from Sonny Bringle from Victorian Finance. Sonny.
Thank you, Chris. Can you comment on your use of second lien products and how you're tying that into strategy if they're becoming a more liquid secondary market for those who are more buyers or more outlets? We do have a lot of requests from people sitting on a 275. Their equities increased dramatically. They don't want to do a cash out. They like to extract it a different way, but we're referring those off at the moment.
We actually don't currently offer a Heloc or second lien option at the moment, but it's something that we're looking into. So I don't know if anybody else.
Yeah, how about any of the other panelists there?
We've got an array of Heloc and second mortgage products, whether it be bridge or, you know, just a cash out money that they want to throw into crypto and Bitcoin, you know, whatever they want to do, because that's what these kids are doing these days, right?
Crypto and Bitcoin. I know all about that stuff. That's good. I got in way early, guys. It totally wasn't a fad that wasn't going to make you any money. That's not what I told my financial guy at all. So let's see here. Ben, you got another question out here?
Yeah, I'm guessing you wrote this one for Cameron. Cameron, if Ben Coll was a Smurf, how many apples tall would he be?
That is a great question
short
again,
joke
Ben. So if Ben Coll was a Smurf, how
The
many
answer is
apples
3
tall?
apples.
Well, I think that's overstating it, Ben. I really do. I think it's an apple and a half, to be honest. But we may have to break it down, you know, kind of like we do CRA. I may have to get in the census tract. Is it a Washington apple? Is it a Macintosh? Because, you know, if it's a Fuji, then I would say 3.
Let's not ask how many apples I weigh, okay? Let's not get started down there. How about any
Same
other...
answer, 1.5.
Thank you. Look at this guy. How about any other questions from the audience here? Anybody got something burning? I know, oh, thank you. I'll come right running over here to you.
So I keep in touch with a lot of different agents, and I don't do as much origination, but one of the big questions that we keep getting asked is what as a lender can we do to try to help make the FHA and the VA applications look more attractive, right? So they're a bit more risk to the seller. How can we as a lender support that borrower in order to try to help make their sales contract look better so that
First we have to change your attitude, right? Because you think there's a risk. There's really not. Education. The VA loan is probably the best loan out there, and it's probably one of the best performing. It's
Well,
not a risk.
Not
It
risk
looks
from
like a safety.
investor perspective, more
Well,
risk
no, from a seller, right? Because they think, oh my God, the appraisal isn't going to appraise, or am I going to have something? Am I have to do something? It's a safety and soundness issue, right? So there's something that's not sound or safe about the house, then yes, you may have an issue. But otherwise, no. I think it's just ignorance. So just education and get a pre-approval program as well.
Okay.
Right? Because if you bring them they're pre-approved for a VA loan, all you need is appraisal. It's pretty easy.
Yeah, and that'll expedite your time frame.
Absolutely.
Anybody else? Megan Burns, great question. Thank you very much. And I got to look and see. Federated Mortgage, I knew that. I got Megan, that was pretty close. But any other comments from the panel on that? No LSU fans, sorry.
I'll make.
Yes, sir, here we go, Rick.
Well, the agencies, if they're still here, we had seconds. We had the ability to do seconds years ago, and it went away for everybody. Is that being talked about coming back? Aggregators as well.
It is coming back. And
You were Fannie Mae? You were, I thought you were warehouse lender. Oh, you've talked to Fannie?
but in order for you to fund those products, which you're going to put them in cash, you're not having a warehouse provider. Oh, absolutely. But they are coming back, and I'm sure Jerry.
I know Jeff you got a good resource right next to you for a warehouse bank here. You want to add anything, sir?
We fund those products as well, just like Ann described. So, but he's asking about an agency question.
I'm asking the ability for independent mortgage bankers to underwrite that product with the aggregators and Fannie and Freddie.
We must have some aggregators in Fannie and Freddie in this room. If not, get them out by the Margarita Bar. That's this afternoon. Bloody Mary this morning, Margarita later on. So type that question into the app because then we'll get it answered for you. That's how we do that, right, I think? What's the next question here? Bail me out, Ben.
Actually, you know what? I wanted to go back. Cameron, do you mind just kind of expanding on why is there that misconception about certainly VA, but also FHA? But I know for a fact from a VA perspective, from a realtor perspective, the question that she was asking, like, I agree, it is a misconception, but do you have any idea where that came from?
No, I wish I did. Again, I think it's just ignorance, right? People just don't know, and they make an assumption. The agents need to be educated, as well as sellers, as well as, everyone,
Yeah.
right? So we partner with a bunch of affinity groups, Mill Housing Network, MARN, which is an arm of Keller Williams, and we're looking at one with EXP to do that, right? To do what's right by the veterans. As a veteran, I think it's important that we support those folks and their families, in affordable home ownership. So we're reaching out, we're trying to educate, and I think that's all we can do.
Right.
Anytime you hear it, just correct somebody.
Yeah. No, it's just
Right, one person at a time, word of mouth. That's the quickest way to get it done.
But it does seem to be universal that every
It does,
realtor
yeah.
has this idea that it's FHA,
Especially in Texas, we've had a really, really hard time where we've been turned down for contracts because they're not VA. The sellers and the agents are steering them away. You need a conventional loan. You might get the appraisal waiver, right?
Oh.
That's kind of the gotcha now in Texas, at least. But
Is it not accepted in sort of low to moderate income areas? I know we have one loan officer that works in one of those areas, and he just does all FHA loans. So I think the real estate agents in those towns, I think they have a better understanding and are more open to it.
from an FHA standpoint,
Yeah.
Honestly, if you don't have a program for them, I guess you can put them in FHA, but if you think about it, that's really the worst program that we have for borrowers. The government has done a really good job of screwing that up. So you're better off using the home affordable stuff with the Fannie and Freddie. Sorry, I know it's.
I was just wondering,
it's more
Cameron, if you-
profitable for FHA, but it's really not a good loan.
Cameron, could you tell us how you really feel, though?
I'm really holding back. Sorry about that.
No, that's awesome. I have Zach Jameson over here, who I want you guys, this is a bonus question. This guy's got the best looking boots you have ever seen. There is red leather on them. That's all I'm going to say. Make a point to view these, and he's got a question for the panel here.
It was more a comment about I see risk in the government programs because when the COVID hit, the pricing completely disappeared on those. It got to where I got absolutely wiped out on the valuations of my government programs of anything that was a FICO under 680. And I completely believe in the programs and in the people, but if you don't have somebody to sell to, it makes it hard to push those programs.
Well, I think that leads to the question that I'm about to be asked, maybe by Ben or by Chris, with the tightening policies and all that stuff. We learned a hard lesson. We do a lot of high balance VA, right? We also occupied that below 600 FICO space. So we were holding 100 million in VA jumbo, and that went out of the market, right? So what did we learn? Okay, pick a VA jumbo that is going to be sustainable. The rest you use best efforts, right? Be smart about it. We're not going to do anything below 600 in our hedge, but we will do it best efforts. If it goes away, at least your safety lock best efforts, right? So you're going to help the borrower, and then you're not out.
Yeah, one of the things, and I see Natalie Arshakian furiously working over here, but one of the things that we do when we have both trading and lock desk clients is we're always working on what we call a living document, which is the guidelines of what's going into the hedge versus what's being locked best efforts. And that, I say living document because it's something you need to be looking at all of the time. So our traders should be talking to you about it. We're going to always update it if you're a lock desk client, but I love seeing that effective date updated, because we have note rate range changes, we've got product changes, you name it, we've got it, and we've got to be monitoring for it. I bet I got a question right here, don't I? I do not, darn it, I thought I was gold. Who's next? Who has a question? Tom Rice, open close here.
Actually, I don't have a question. I just wanted to give you some steps on your FitBit. As a mortgage technology vendor, I just wanted to ask the panel as the volume begins to correct after the refi boom, is there strategies within your companies to review technology, look at ways to create some operational efficiencies, and or with the downturn, kind of hunker down as to what you currently have and not make those kinds of plays? I just want to understand from a strategic standpoint what your thoughts were.
I'll go ahead and answer first on this one. From a technology standpoint, we are looking at revamping our technology, improving it, expanding it. We're currently looking at AI technology and bots to incorporate into our processes. We're looking at outsourcing for specific procedures. So definitely trying to take advantage of the technology that's available. Also improving our web presence and making sure that that is current and advancing with technology as well.
I picked something up in our intelligent automation breakout session yesterday, which, by the way, was the most well-attended session, if anybody was wondering. If anybody, a vendor, tells you they have AI, you are immediately supposed to ask them what algorithms they use, because if they can't answer it, it's not AI. Free advice. Ben, what's next?
Honestly, after you said margarita bar, I kind of checked out. So.
Take it easy, Papa Smurf. Take it easy. I know we're not paying you, but you still got to put in a day here.
Will work for margarita. Any questions? Any other questions from the? Oh, got one over there.
Yes. Okay. Great. God forbid the fit one get down and run around a little bit.
That's fine.
We kind of covered it.
That hand for me. There he is. Hey, Alberto here. I believe this man was the recipient of a 2-year late bottle of Johnny Walker Blue last night, correct? Dave, that's an expense that you'll be expected to approve. Sorry, sir.
Oh, no, thanks. Hey, going back to kind of the product development, just curious, what's your guys' kind of rollout period? And then to that, what are some of the bottleneck areas that you see that you guys are facing when trying to roll a new product out?
So I'm still learning the ropes. Right now we have 2 mortgage divisions that we're trying to align. So that's really the bottleneck, is how do we figure out how to get 2 mortgage divisions that are both Armed Forces and Academy on each side? How do we roll it out? How do we have the correct staff? How do we get the training done? And how do we not overwhelm our resources to get those things done? But I envision that it should be less than 30 days from, I guess, the thought to the rollout and actually putting it out on the street for the sales team.
How about everybody else up there? Is that 30 days sound reasonable? That gives you adequate time to check your technology to educate your staff? Is Cameron just crazy there, or is that legitimate?
I think it can be for new products. I think with technology, I think compliance gets involved in all the different departments, but I think with products, if you have the right group, I think you can get it done in 30 days. That's what we do, yeah.
Yeah, for us, I mean, 30 days is definitely reachable, and if it's an investor you already have approved, now if you're going after a new investor in a new product set, having that application process and approval process will definitely derail that 30 days.
Yeah, I would say for us, we're probably more along the lines of 60, just because we have to get board approval for any of our changes. So making sure that those are approved, and then also putting it through the technology aspect too, where we have a lot of different technological projects always ongoing, getting it lined up with our IT department.
Great. So Chris George brought up, something that I think, a couple of folks from MCT, I know Phil brought it up yesterday. One of the real kind of benefits that we get to have in this business is expanding home ownership opportunity and credit to different populations that aren't, that aren't traditionally able to access that. So at the credit union, Kurt, what are you guys doing to lend specifically, increase your lending to minority borrowers?
Yeah, so I mean, we've taken a real look at kind of where we're at and done some introspection. We've tried to identify where are our blind spots when it comes to minorities. And, through that, we've identified that we do have a few blind spots. One of them we found was in our marketing. When we market to are we marketing to our specific demographics, using actors and such that are of the specific race and whatnot of our population of members. And so we've, made adjustments and changes to make sure that's correlating with who our borrower is. We've also looked at the level of education and understanding. And I think it's important to understand that each race is probably going to have a little bit different background and experience. And the example that I would use is, several years ago I lived in a foreign country. And people would always come up to me and ask me for American dollars. They wanted to trade their pesos for American dollars, even though it was a one-for-one exchange at the time. So you have to kind of understand where some of these people are coming from. The reason they're asking that is because their currency has failed multiple times. The political system that they live in has failed multiple times. And so when we talk about diversity and minorities, many of these people have come from many different countries where they don't trust the banking system, they don't trust the political system. And so that creates some real challenges. When we're bringing them here and we ask them now to say, okay, you want a mortgage, you're now required to have money in a bank that's been seasoned and sourced and different things like that. That's a challenge to them because they don't trust the banking system. And then we talk about all the regulation, which is just foreign to them. If you look in Spanish even, they do have a word for a mortgage, but most people in a lot of these other countries don't actually offer mortgages through their banks. And so that creates a level of confusion for them. And then you take it a little bit further and you say, okay, terms like amortization and truth in lending and all these other terms that they do not understand. So I think one of the biggest components that we look at it as a credit union is the education. How do we overcome those obstacles? And I can tell you that when you work with some of the minority populations, a lot of times it's going to take more time. But it does create a fiercely loyal client. And so that's one of the things that we've looked at the credit union, say, how can we help these people? So again, we've looked at marketing, we've looked at our servicing aspect. On the servicing side, what do we do? Do we have the availability for them to speak to somebody in a different language? Do we have the ability to send out statements in their native language? So we've looked at those aspects. We've looked at the origination process to say, okay, what does our website indicate? Do we need to make changes there? We've looked at it from the standpoint of our loan officers and our processors, making sure that they have the ability to help and be fluent with those borrowers and understand the credit challenges that maybe they have as well. So it's been overall an approach to that degree. And from that, and in speaking with our loan officers and assessing kind of what the needs are, again, we have created some unique products. We've gone back to our product mix and said, okay, we've created an I-10 program to be able to help what our membership is. And so that's been a new program that's had a lot of demand. and been very popular. Another one that we've created is we've created what we call our Home Buyer Plus program, which it takes some of the components you see from like the Home Ready program and things like that, that allows for border income, allows for second kitchens, allows for lower FICOs. And then we've tiered the rate in such a manner that we can help those that are more disadvantaged, you know, and we've looked at the credit box to say, okay, what other exceptions can we make based on what we know about the populations that we serve? So really a proactive approach to say, okay, educate and then also offer options that can help them to overcome those obstacles that they have.
That's a great answer, and I will make a shameless plug here for my buddy Tony Thompson, who I'm not seeing in this room, but if you don't know Tony, Tony is the executive director of the National Association of Minority Mortgage Bankers, and they have an awesome product that actually will dive into your regions, your specific regions, and identify where there are certain minority needs that you can target lending. So if you haven't talked to Tony, it's a great organization. We're a proud member at MCT. It's a great opportunity, to discuss membership, but also to look at that tool that he has available. And I'm sure there are other great, tools out there too. If I'm cutting anybody off here, I don't want to get in trouble when I leave the room. But I think we've got one more question here that's prepared for Cameron. Again, I want to encourage you to be open and honest and to tell us how you really feel. With the Fed's pending tightening policies and the geopolitical events that we're facing fueling volatility every single day, have any of your internal lock desk or capital markets procedures evolved or changed?
I mean, the short answer is really no, right? They all changed March 2020. And we just continue to refine them to look at, is it a good day to commit? Is it a bad day to commit? Should we just commit conventional loans? Should we commit government loans? We got to dump these second homes before Freddie and Fannie don't allow us to pool them anymore, without the big hits. Thank you, FHFA. So, yeah, right, the answer is really no. So what do we do? We're smart about it. We dial things in. We take every day and take a look at what's the market doing? Is it volatile? We're going to pass. Is it not? And then we look at products. Do we want this product in the hedge? Do we not want the product in the hedge? We're always looking ahead before we ever put anything in the hedge. And then we trust our people from MCT. These are brilliant people. I think not enough is said about the Chris Andersons, the Curtis and Phil, and even been Coll Smurfy self. But my team has been great, and hopefully everybody else has experienced the same thing with MCT. Shameless plug for them, but I love them. So yeah, they help us a lot. We trust in them, and anything we think might be right, we go to Ron. Ron says, "No, Cameron, you're way off the mark. You're crazy," which is somewhat correct. But that's it in a nutshell, right? Just paying attention, look at all kinds of data until it makes you cross-eyed. It makes you sick to your stomach, but.
Yeah, well, thank you for the shameless plug and leading with my name. I appreciate that. But the other thing is, for everybody here, you always want to really highlight, our traders are always going to be reaching out to you, right? Our staff is always going to be talking to you. But the things are moving so fast right now that, we'll be, on calls as an executive team at 4:30, 5:30 in the morning deciding, hey, what do we need in this market flash that we're going to send out? And so if you see MCT Market Flash, I know our marketing team does an amazing job at inundating you with MCT content, but yes, great job marketing. And Leslie, she clapped, the only one, okay. Marketing's great. But if you see Market Flash, open that email ASAP. Again, for our managed accounts, our guys are going to be reaching out to you, but you can only call so many people at the same time, so read and react to those market flashes all the time. And how about the rest of the panel? Any other commentary on maybe any changes to your rate lock policy? CC, anything to add?
Well, kind of to echo Cameron, when you usually commit daily, it's now kind of holding back based on what you see the market doing, and then getting a bigger pool of loans, kind of tranching them out and looking at your typical investor appetite from a historical level and seeing, okay, well, they typically like this, and then kind of going to them and giving them the pool option if they, pay up this much or, average out this amount of loans. Would you like to take, this percentage or the whole thing, kind of a last look opportunity. But again, holding, in a volatile market, just kind of waiting. I mean, there was a day last week that I had, 200 loans on a bid tape, which is unusual. and then executing at that higher level and comparing against your AOT and what you have open to really mitigate that broker-dealer ticks and picking up that profitability that you may have lost in the market.
Great answer. Anybody want to add anything on to that? Any questions from our audience? I know my good buddy Mark Wilson, Sequoia Pavoni, I'm mentioning Mark Wilson, who I've been asked to find for you 15 times. He is this handsome gentleman right here. Anything to add from maybe a hedge accounting perspective, sir? Love it putting him on the spot. Also, what's the name of your boat? That's one of the questions these guys are supposed to be getting.
Indecency. Although I think you guys have it as something different, because I've told a few people and that's been rejected. Marketing. So it's CWDL CPAs, I think, is the right answer. But no, I just echo what I don't have anything to add. I mean, I think what everybody said is right. Obviously, I think the one thing we always tell our clients is make sure the data is correct. Data hygiene, we see oftentimes isn't very good, and especially during when we're doing audits, we go and we look at the fair value, and oftentimes there's some bad data in there, which can lead to some leakage for sure.
That is a great point. Whenever we onboard a client, and a lot of you have gone through our onboarding process with myself and Paul Yarbrough, sorry. Don't ever misspell that on a slide, because he'll correct the president and CEO of our company. He'll just bring it out. Curtis spelled my name wrong. So, but in our onboarding, that's why Paul and I are literally on every single client onboarding, because that data integration portion is so important for us to get right. So we do see some sort of misnormalization in a program, something along those lines, and it can affect you. Now usually it's going to get vetted out pretty quickly, but when we're moving so quick, so fast, we really want to stay on top of that data integrity. I always know we've hit the apex of a presentation when you get down to talking about data integrity. So I am a super nerd about that, and I love it. But who's got some more questions for us, or any more comments from our panel?
Actually, I did just have one quick question going to what Kurt was talking about with working with the minorities in their language. Is it? And it's been 7 years since Chris didn't pay me to run ops. But are the LOSs and the various doc drawing systems, can you operate in any language now, or is it still restricted a little?
Yeah, it's still more restrictive. There's progress being made, but it's not where we would like it to be today.
Sorry, I was just curious on that one. I didn't know if...
And just to be clear again, it was Chris George not paying him before. It's Chris Anderson who won't be paying him tomorrow. So we've got that good. Any other questions? How about a big round of applause for our panel of origination experts? Thank you so much, Cece, Florence, Kurt, and Cameron. Thank you guys. Ben Coll, Papa Smurf, we love you. So that takes us...